following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out today with the crude oil market because we have some interesting similarities approaching us as we come in here to this solar eclipse and new moon. Looking at the crude oil chart going back over the last year, you can see we had a huge rally that started in March of last year that took the market from $40 all the way up to $63. It rallied $23 a barrel. Then you saw when we made the second drive of this pattern, it came in August, and during the time of August, September, October, the market rallied just about $13 per barrel. And then we made the third drive to the bottom here on February the 12th. And since that time, we rallied up to almost 39. We hit the 38.50 today. 39 and change would take it exactly to the same level that we rallied from August through October of last year. As you can see by looking at these ABCD structures that are highlighted there with the dark blue lines, you'll see that we did make those swings to the downside quite nicely. And now we have completed what I think we're getting up into this 39 area is this is still a bear market, folks. I mean, no other way you can look at it. You've got lower highs and lower lows. I mean, all we're doing now is having a counter trend rally, and it's doing it in the same time that we did during August and October. So this is the time where you want to be looking not to the long side of the oil market, but to the short side. And remember, you know, this market, this took off. I mean, we have been going up for $12 a barrel in oil with some of the most bearish statistics that we've ever had in oil. In fact, that they bombarded with it every day. That just doesn't mean, you know, that it's not can't go a lot higher. It just means that the news is such that it looks bearish, and yet the market keeps rallying. That in itself is a bullish thing. So the one thing that I do feel very strongly about, and that is that this bottom that we've had now in oil here at 26 and change is a real strong bottom. So any type of a pullback to a 61% retracement really warrants very important concern, because you should be looking to be a buyer of that one, because this has a tendency to be a very bullish pattern, you know, on the long-term charts. But short-term right now, we should be, you know, ready to move over. We've been up, actually. We've had we were up 10. This is the 10th day of the run. We've had a couple of smaller closes, but never lower lows. So it's been running for quite a while, and we do have some resistance at the 39.50 level in oil. But the thing to watch is to look to buy the retracement, because that looks like it could be something that would be really, you know, really good. Now, one of the things that we talked about last week, and we also mentioned it on the show yesterday briefly before we had our friend Bill Koval on, and that is the we're going to couple of currencies here. I want to talk about those because I've had some requests about it, and then we're going to get into the stock market, of course, and then I want to cover the grains. I'm trying to get our good friend Rich Anderson from Anderson Capital Management on next tomorrow, and we'll see if we can chat with him. But this is the Canadian US dollar. You'll notice the cycles that we have marked in here are due to come in sometime this week. Now, yesterday, this is the chart that I posted for Monday, and as last night, we did get down to that 132.50 level. And since that time, we've had a little bit of a bounce, not much, 60 points or so, but we could be looking at a pretty good bottom here in the Canadian versus the dollar. 1 second, please. And this is just the opposite of what usually happens in the oil market, because there's such a high correlation. This is actually the inverse of that. It should be dollar Canadian, but we have it listed as Canadian dollar. and Canadian versus U.S. dollar. So this is another one that we want to be watching. These are cycles. These are just patterns that I'm looking at. This has nothing to do with the fundamentals. Don't understand them. Don't need to understand them. And all I'm interested in is what's happening with the price pattern. And this is telling us we should pay particular attention to this one because we are at some major support at this 786 retracement going back from last October. So we'll watch that very closely. Now on the another part of the currency thing that I wanted to talk about is the euro, because we had the same thing. Let's do the Japanese yen first. And then we'll move on to the British pound. This is the Japanese yen. Yesterday we hit this really significant low here in the 112 level. It's held it so far, and as long as we stay above this 112 level, you'd be looking at something very positive. This is very similar to the same chart that we looked at in the Canadian dollar, but the Canadian dollar chart was on a long-term daily chart. This happens to be a 30-minute. That just means you see these patterns on different time frames all the time because they repeat over and over again. It's not a question that how they're going to do it. It's just when they when they do it. That's pretty much the bottom line of what we're trying to look at here. Now, I would like to switch over here, and now we're going to take a look at the British pound here because we've had a nice run in the British pound. We rallied 400 pips here in the last 2 weeks, which is a pretty good rally, but the market has been extremely bearish, and now we want to see what's going to happen with the pound. Yesterday, we made a 3 drive to a top pattern exactly at the 1.618 expansion. You can see that on the charts. The numbers are listed there. You can see the highs, the drive 1, drive 2, drive 3. They're very symmetrical from high to high and high to high. So that's exactly what you'd like to see. Now, if this is in fact going to be the correction, then we want to watch this, because if we get this down to several hundred pips from here, which it could easily move, we could be looking at a potential buy. And remember, this market was hit very hard at the end of February, talking about the brick exit, as where the British pound was going to exit the euro, and yet with all that bearishness, the market rallies 400 pips. So, that's why technical analysis is my favorite, because you don't have to listen to the rhetoric that these people are telling us on the on the tube. I mean, when we were just look at crude oil, it rallied $13 a barrel in the midst of some of the bearish statistics that we've ever had. And I have to give a lot of credit here to John Logan, because he was looking at his profile, and it wasn't at the exact bottom, but several dollars off the bottom. Logan was telling us that his profiles were saying that the market was turning, and sure enough, the market is turning. So we'll watch that with a great deal of anticipation here, because I think it's pretty important to keep an eye on it. It's got a nice chart. When it backs off a little bit, it'll be a good place to take a look at it. So we're going to take a little break here, 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, the next one we're going to take a look at here is the euro. As you can see, we had some really strong support come in last week at that 108.50 level. And it's hit the exact 618 and 786 of the previous swings. And that's what I try to find is when you find those multiple numbers coming in, that's another way of looking at cycles. We're looking at cycles in price and not in time. And when I have that, I know that I'm at a point where if it goes below that level, I'm certainly going to be wrong. But if it can hold that level, that tells me that that price has some very strong significance. And we've had a 200 pip rally, a little bit more than that, to take us up to a 382 retracement of the last swing up here at this 110.50 level. Now, if we get above 111 in the euro, this whole pattern will change. But right now, it still looks bearish, and it looks like it wants the euro to go quite a bit lower, you know, down into the area of par. And actually, 99 on the long-term, you know, weekly charts is a very, very important spot. So we'll keep an eye very, very closely on that. Now we're going to switch our talk now over to the platinum because I wanted to bring this up. This was the chart that we had here on platinum. Let me bring it up here for just a second, and we'll let you take a look at it because you'll see that we've had a huge move in gold compared to platinum, and then also silver, which is really lagging badly. I mean, it's just been going lower and lower. Now, you know, the gold is very, very attuned to in these lunar cycles, folks, and we've got the new moon and a solar eclipse today, tomorrow. So don't be surprised if we don't get a sell-off in the gold. Or we could accelerate to the upside too, but it's not showing that in platinum and silver. That's not happening. They're lagging, incredibly badly. So we got to watch that, very, very closely. If we look at the other metal, if we look at the brown metal, which is copper, or copper colored, I guess, you'll notice that copper is forming a Gartley pattern going back to last September. We're up at the 61% retracement up there at 230. We're trading at around 224, 223 right now. So that has completed the ABCD Gartley pattern in copper up around the 220 excuse me, 230 level. So that's another reason to think that there's a possibility that maybe these metals, could have a little bit of a sell-off. And of course, if they sell off, you want to be looking for a place, to see if they're going to be a buyer or not. But we'll watch it each day as we go through. But right now, with this lunar thing that's overhanging the market, I think we have to, pay, very, very close attention to it. That's just the way that it appears to me. We'll see how it ends up today, but that's from the cheap seats here in Tucson, Arizona. That's what we're looking at. As far as the gold, on the shorter term basis here, we're up here. We matched that old high almost at the 1281 level. So far today, we got up to 1279. And there's a possibility we could get $5 or $6, maybe even $7 higher, but I don't think we're going to be running away to the upside. We've just been here too long without a breakout to the upside, and without the confirmation of the other metals, I just don't see gold running away from this level. That's just my opinion. I'm just looking at the charts. I don't understand, the fundamentals of what's going on or not. I really don't know. Okay, now we're going to take a look here at the stock market. And that's always one we like to look at. And what we'll do is we'll look at the S&P 500 to start off with. That's the one that everybody seems they like to trade quite a bit. And if you'll notice here, over the last several weeks, that we're completing a very large ABCD pattern that bottomed on the 24th of February. We ran up into the 27th. And then we backed off to a 61% retracement that came in on the last day of February of the leap year on the 29th of February. That was a perfect 61% retracement there at the 925 level. And from there, we went up and we completed the ABCD that came in at 2006, and the high was 2007 and a quarter. Now, since that time, the last 3 or 4 days, you'll notice that all we've really done is complete an ABCD pattern that ended today when the market hit the 1981 level. And from that level, we had a rally of about 15 points. We're setting under that rally right now, but there's a possibility now, and you're going to have to follow along with me if you're watching this on Tiger TV. If not, Tiger TV. If not, you can check it out when you get home. But if you look at the high that we made on the 4th of March, and that would be the number 1, and then number 3 would be the one yesterday, and then the number 5 would be the one today. That would come in at 1995, and that would be a 135 pattern. Now, as long as this market does not get above 2002, it has a potential for a down move, and the real trigger for this down move is if we break through the 1980 level on the downside. That would tell us, yes, maybe this top is in and we're getting ready to have another move down. On a longer term basis, and I mean a longer term basis, if we take a look at this from the regular New York Stock Exchange Index, you're going to be seeing that we are completing a major Gartley pattern here on the daily charts. And if you look at this with this big ABCD pattern that is here, there is no question that this is a bear market. I mean, you can see we've had lower highs and lower bottoms, ever since May of last year, on May 19th, when we topped. And on that day, we had a new moon, and we also had Mercury going retrograde. I remember it very vividly because we had our good friend Norm Winsky from Astro Trend on, and he was pointing to that as a potential, for a major turn, and it certainly is that way. Now, those of you that like to look at the moon and go out and howl, we have a new moon, of course, and then we have the solar eclipse today. But the new moon is very beautiful. If you look at it early in the morning and see the really bright star behind it, that's Jupiter, and it's very bright because of its location and the fact that it's opposition to the sun, and that gives it a little bit more of a brighter glow than it usually does. So we'll keep an eye on the moon just to make sure it comes up every day like it's supposed to. The next phase of what we're going to look at this morning, I've got some questions that people have asked me about. I'll try to answer those as we go into the second half of the show. But what I'd like to do now is to just bring up one other thing that is very interesting here. And that, to me, it is from a technical standpoint. And since it's interesting to me, I'm going to share it with you. This is the this is the IBB, which is the biotech index, and you can see here we had the big ABCD patterns that completed all the way through here back in August, and then we had another one completing in February. And this market, made much lower lows after the rest of the market did. But the important thing is it's been rallying now for a month and has gone nowhere. I mean, this market has had this is the real structure of a dead cat bounce, because if you'll notice, since February the 10th, all we've been able to do is rally from 241 up to the 272 level. That's barely a 7% rally when the rest of the market took off like a striped deer. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and we're going to be looking at the soybeans, wheat, and corn. We've had some interest in that. We've had a rally here in beans where we went from 660 and we rallied almost 30 cents up to the 687 level. But as you can see from this chart, which is an hourly chart going back over the last 3 months, that we've had lower tops and we've had higher bottoms. So we're in this midst of this triangle that we're looking at. Historically, we know that the seasonal basis is going to be coming in here pretty quickly because we're going to have the planning intentions report going to be due pretty quick. We'll have Rich Anderson on hopefully tomorrow, and he can discuss some of that with us. But as we mentioned from the previous show when we had John Logan on, and then Mr. Z from Philadelphia called in, and we talked about the huge supplies that are overhanging the market. Folks, get used to that oversupply stuff because we heard it in crude oil, we heard it in other things too. And remember, these markets discount some of this stuff. And boy, we are only one bad crop away from disaster in the world because, between us and Brazil and sometimes Russia, and a little bit of China, we have one really bad crop. We're looking at something, really, really dramatic to change the world supply of food, and food is power. So we have to watch it very, very closely. But right now, what we're watching now is some strong support in the 860 level, the 850 level in the beans. I personally, what I would like to see is I would like to see another ABCD pattern forming here over the past 3 or 4 weeks to take the beans down one more time to a new low around 850. And that's not very far. That's only 26 cents from where we are right now. And 26 cents in beans is not very much. As you can see, over the past 5 or 6 days, it rallied 30 cents. So I'm still waiting for this. This is the key to what I'm watching. Now, if we had broken out to the upside and we had gone above $9 a bushel, then I would think, well, there's a possibility that we're going to have a pretty good run in this. So we'll see what's going to be happening with it. So that's what we're watching in the soybeans right now. So the next one we're going to take a look at is the wheat market. Here again, you're going to see a market that is in a downtrend. There's no question. We've had lower tops, lower bottoms. You'll notice the 3 drive to the bottom pattern that we had down at the 442 level. That was just about as perfect a symmetrical pattern as you're going to have. And then we've rallied 40 cents a bushel, which is equivalent to $2,000 in wheat. But again, we're looking at lower tops. We had lower tops in January, lower tops in both early February and mid-February. And so far here in March, that's the same thing that we've had going on. Now, should we get above the 470 level, and that's about 10 cents from where we are now, say 475, then there's a possibility we could be breaking out. But right now, I think the strategy is to keep your powder dry, wait to see what's going to happen because you're backing off again. You're in a downtrend, and the pattern is such that we just don't have a really clear buy right now to take a look at it. So you want to watch it and see if it's going to hold up to that level. And as luck would have it, I did the corn and I can't find the darn thing. Hopefully I will find it here. We'll see if we can find it. Okay, we'll switch over to bonds, and then I will find the corn here in a little bit. I do want to cover bonds because we had a really good pattern forming in bonds yesterday, which basically is talking about the risk-off thing where bonds will rally and stocks will sell off. Whether that's going to be the case or not, I don't know. But since the mid-February, when we had that big bottom in the stock market, which was on the 10th of February, you'll notice the bonds were way up in the stratosphere at that time. That was when risk was off. Nope, let's try it again. When risk was, why don't they make it just really simple? Risk on means that you can buy, you don't want to take any risk at all. Risk off means you don't have to, oh boy. I'm not even going to try to figure this out. When bonds are really high, stocks are usually low because money's moving into bonds for safety. Let's leave it at that. Okay, what we've done now is we've completed a big ABCD pattern here from mid-February to where we came in yesterday. That was a perfect ABCD pattern that ended at 161. We've now rallied several handles off the bottom, and that means if it's like the last rally that we had, we went from 164 up to 168, we could rally 4 points. Folks, we rallied 2 points in the last 13 hours. So this is coming out here very, very strong, and it's got a chance, for some movement to the upside. So we'll watch it closely. If you have a chance, if you weren't able to get in on that ABCD pattern down at the 61.5 level. Then watch for a little pullback around the 162. Might give you a spot to enter it, but we'll look at this. Long term, I'm very bearish on bonds, but short term, it's certainly completed a really nice ABCD pattern here and has a potential to go a great deal higher, at least another 3 points higher, just to match what we did, on the last run that we had. So we want to it's a good way to look at the market from a person that is really, let's look at it this way. In other words, where is money going to go if it's not going to go into stocks? Sometimes it goes just to pay off bills. But for these money managers and stuff that we have for the mutual funds, they have no skin in the game. They've got to put the money somewhere, or they're not going to be looking at what's going to see what's going to happen. Now, so far this morning, we've got crude oil is now down $1 off its high. We mentioned that at the beginning of the show. There's a possibility of that. Nothing is etched in stone, but we've made a major correction, just like we did from August through September. In October of last year, we rallied $13 a barrel. We've rallied $13 a barrel off of the lows that we made recently in September or January, February, March. And so we're 3 months into that. So we had a 3-month rally for $13 a barrel in oil, and then we had another 3-month rally at $13 a barrel that may or may not have ended today. You can't really tell, but it's just one of those things that it's in the area of what we're looking at. So that's the bottom line that we're trying to figure out. And from this level now, I'm trying to do the corn. Boy, this is really frustrating to me because I put these things out here. I've got them all lined up perfectly. And then when I go to find them, guess what? They disappear on me, which is very frustrating. And technically, I'm not a rocket scientist. Boy, if that's not an understatement of the year, who knows? We'll have to wait and see. We had a question about the NASDAQ, folks. So we're going to answer some questions here that people have asked me about, called or sent emails on. Anyway, we'll look at the S&P here. This list, oh boy. We'll look at the NASDAQ. You'll notice the NASDAQ topped right around the 29th of December. It made those 3 equal highs. Basically, that's a 135 pattern. It's also a beautiful head and shoulders pattern that we made at the very high. And, of course, that's one of Dr. Andrew Lowe's most popular patterns. We're going to cover this NASDAQ when we get back. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we are going to be talking here about the NASDAQ because that had been the strongest of all things during 2014, 2015, and now it's switched. It is not the strongest. As you can see by looking at the daily chart here, we actually topped a week ago, and with the market up 4 days in a row, going into the end of the month and the beginning of the month, it was down every day, and it was down again today. So that's usually a sign that weakness begets weakness. It's back to Isaac Newton's second law of motion. Objects continue to go in the direction until they change. And that's the way it is. For every action, there's an equal but opposite reaction. And now we're looking at something that is getting ready to look like it wants to move a little bit lower. We're now down $10 from our highs in the gold market so far today. Here again, I just don't trust this gold from the bullish side. I'd like to see a nice pullback, but it responds well to the lunar cycles. So we should have been topping somewhere today in the gold. You can see the pattern that was there, that it did have the possibility to go a few dollars higher, but I don't know if it's going to reverse or not. It has a tendency to reverse at all times. Now we have a pretty strong move in bonds today. They're up over a handle so far, which is quite a bit in bonds, and we've broken through that 164 level, which is the 382 retracement of the whole move. So we've got to stop pretty closely in here. Otherwise, we're going to be looking at something very, very interesting. Oh, we've got a caller from the foreign country, Toronto, Canada, one of my favorite places. Edward, are you there?
Yeah, I'm here. Hi, Larry. How are you?
I'm very good. What can I do for you?
I am following your teachings for a while, and I'm very impressed by them, and I'm trying to learn what you're teaching. Just wanted to check with you to see if I understand the concept of your Gartley invention. I'm just looking at E-mini, right?
Yes.
If I'm looking at the weekly and daily charts, and it looks like potentially we have completed the ABCD pattern, and it is basically a good potential for it to start moving down in a bearish direction. But I'm looking also at the hourly chart, and I see that it is basically there is a potential that it has not completed ABCD pattern, and it is right now in the move C, which can change back to complete a ABCD pattern. Then it would go to about 2000. Unless it breaks 1980, like you said, which seems to be the support right now. So if it breaks 1980, it looks like it may go much lower. Also, I'm looking at the New York Stock Exchange, and it looks like 10,000 level is a pretty good resistance level. And it also seems like 786 retracement on a daily chart. Is that correct?
Well, I will tell you this, Edward, that Tom O'Brien from TFNN will be contacting you shortly to be one of our broadcasters here, because you have described two perfect Gartley patterns, one in the S&P and one in the NAS or the New York Stock Exchange Index, because yes, they are complete. They've completed the ABCDs on the daily. Now, the one thing that you've done here that sometimes can be a little tricky is that you switched, from a daily chart, over to an hourly chart. Whenever you do that, you're going to get some small nuances, in your price objectives. But that area of 2,000 that you looked at, and I've just posted it into the Tiger TV room here. You can see that the S&P yesterday, closed right at that 200 level, and if you realize that the futures are, 1/10 of that, that's exactly what it hit. They hit 2007 just the other day. So once if we go below the 1980 level, then I would think that yes, this has started, and we're getting ready for a more severe correction. But you've certainly got the patterns down flat. You should be proud of yourself. You did exactly what
Thank you very
HN
much. I spoke to you once before, just to remind you. I am former student of Jared Martinez, and we spoke on the phone once before. You called me.
Sure, yeah, from Florida. Sure, I know him very well. He's very
right.
smart man, very successful. But the main thing that you've done here that I would give you some caution on is to be careful when you switch back and forth between time frames, because what you see on the hourly chart, even though it'll be very close to the daily, it won't have all the data that's necessary. One of the things that people do is they'll be doing an hourly chart, and then they'll switch over to a monthly or a 15-minute chart. And when you do that, you're looking at a total different, set of time parameters. So you've got to trade this chart. So if you're trading a 15-minute chart, stick with that. If you're trading an hourly chart, stick with that. A daily chart, stick with that. But the pattern itself is perfect. Edward, you should be proud of yourself.
I'm just trying to fine-tune my trading so that I can take small risk and high probability movement in a certain direction.
Well, that's what it's all about. It's about risk, because we never know whether we're going to be right or wrong, and we never know how much the market's going to give us. So the only thing
I have learned this the hard way over time.
Well, just remember the old Chinese adage, the smart man learns from his mistakes, the wise man learns from the mistakes of others. So, stick with people that have made a lot of mistakes like myself, but try not to make them as often as I did
I'm
before.
also thinking that sometimes the thought is faster than the action. So I think it is also very important to have the thought and understanding first before you act on it.
Indeed, that's for sure. Well, listen, thank you for calling in, Edward. We always like to hear from folks in foreign countries. I joke about this because my wife is from Toronto, and she's Chinese, but
she's from Mississauga, I think, right?
That's correct. Yeah, her sister lives there, and the family's there, so we do commerce with Toronto quite a bit. If we ever get up that way, we'll go to lunch. Okay?
Thank you, Larry. Thank you.
All right.
Pleasure talking to you.
Thank you for calling in, folks.
Thank you.
Very good. And I'll be sure to send Edward his $20. But anyway, we're going to be looking at these markets, pretty closely now. We got some pretty good support coming in here in gold down around this $12.50 level. That's about $18 from where it is right now. That will be an interesting one, because the harmonic numbers in gold are 17 and 34. So we've already just about made the first one. That would come in at 1262 in gold. Anything below 1262 in the gold would usually trigger that we're looking at something a great deal lower. So that's the bottom line. We've went down and we've matched the low overnight in the S&P, which is around 1982 level. And we're bouncing around that. The 1980 is a very critical level in the S&P, And also, while I'm watching this, I'm keeping an eye here on the Treasury bonds because long term I'm very bearish in bonds, and we've just made the 38% retracement of the last high that we made up at the 168 level. The problem is it made it in just a matter of a few hours. So it's got some power here. If we get bonds much above the 164.20 level, we're trading at 164.09 right now. This has a chance to have a pretty good run. So right now it's the early part of the day. Not too much is happening. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to wind up the show here by doing a little review. We've seen the S&P complete this long-term ABCD over the last several weeks, from February the 10th to where we are now. And also, we do have the new moon. We have the solar eclipse. The market measured to that 2007. If we get above 2007, folks, that's only 20 points from where we're trading right now. That's not very much in these markets. We're going to go higher. But until that time, we have to assume that these patterns that we just talked about with Edward from Toronto, the Gartley pattern in the S&P, the Gartley pattern in the Dow Jones, And then also, we don't even have a Gartley pattern in the NASDAQ. It's just so darn bearish that it can't even make a 61% retracement of the whole move. We've already seen the weakness in the IBB, so there's something not amiss, not right, but things can change quickly. Two of the keys that you want to keep an eye on are that Treasury bond market. We've rallied up here to 382 of the last high that we made a month ago, but we did it in a matter of 2 days, which usually means it's bullish. But if we can get the bonds above the 164.20 level, that'll tell us that the people are starting to take the risk off in their portfolios and move to bonds. I don't think that's the right thing to do, but that's what they will do. We'll wait and see if that is in fact the case. As far as the grain markets, we've got time, folks. They're not running away to the upside from here, but I will be doing some more work. I've got to do some conversations with Rich Anderson about the old crop contracts versus the new crop, which are like our November soybeans and December corn and things like that, because those chart patterns are different than what we have in the other markets. So we want to get some Rich's input on this, but we're watching the patterns in the grains. We still have time, so let's not worry too much about it. Gold is now down $15 off its high, so maybe this lunar effect that we are expecting is kicking in gold. We'll have to wait and see. We'll let it. So 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.